Today we are doing a subscriber review video. We're doing BlackSky Technologies. BlackSky has two major risk factors, and because of that, I consider those both red flags. So we're going to review the stock, talk about some of its growth potential, share those risks. I'm going to let you know at the end of the video if I think it's a buy or not. Okay, so first of all, here is my portfolio. The goal is to grow this portfolio to $1 million over the next 10 years, completely transparently here on YouTube. I do have an email newsletter where I give full growth write-ups and share the purchases I'm going to make before I make them, austin.substack.com. It's linked in the description below this video. But here's a portfolio, $64,105. We are up $2,200 today. That's pretty cool, 3.6%. All time, we're down $7,800, and this portfolio started on February 15th, 2022. So we've put about $72,000 in. Long way to go to hit that $1 million mark, so stick around, like the video, and subscribe to the channel if you want to stick around for that journey. Just real quick to show you, here are the stocks that I own. Again, I go into detail on these and full write-ups and buy reports in my email newsletter, but just showing you I do not own BlackSky. I'm not short BlackSky. I have no position in the company I'm talking about today. So you might be wondering, if you've never heard of it, what is BlackSky? It's a pretty small company. They do real-time geospatial intelligence. This is an image of a picture that they provided from their satellites of Ukraine. They do economic and supply chain intelligence, so they can look at shipping ports and see if there are ships there. What is the loading activity on docks? And this sounds kind of crazy, but investment firms and analysts and people on Wall Street have been using this kind of data to make estimates or predictions on sales from things like traffic in retail shopping center parking lots, all kinds of that, for a lot of years. So this is not a new thing, even though it sounds kind of crazy, but the technology is just getting better. They have critical infrastructure monitoring. So different things that an economy or the global economy might rely on, they can monitor that with imagery and video from their satellites. And then crisis management and response. This is an estimated total addressable market, but they say it's 13 plus billion in 2020, growing to 40 plus in 2025. That sounds great. It's really exciting. They think the catalysts for that are going to be defense industry shift to space-based tactical intelligence, surveillance, and reconnaissance, ISR, commercial demand for real-time geospatial intelligence, proliferation of GPS-enabled devices, web mapping services to shift to real-time updates. Okay, they say they're relied upon by the most important demanding organizations in the world, the U.S. government agencies. We could see Air Force Research Laboratory, the United States Space Force, Sandia National Laboratories, NASA, U.S. Army Space and Missile Defense Command, Global 2000 companies. So let's remember that. Let's remember the companies they're talking about here. And this actually leads to risk number one, the big risk that I'm talking about. Essentially, they're saying they have created this software as a service platform that gives comprehensive solutions for government entities and even commercial customers that are looking for imagery. And so by doing this, by using this kind of digital-based or software-based, cloud-based approach and their technology, they're saying they've taken what used to take $120,000 in 2 to 3 days, and they can give that to customers or end users for $12,000 in 90 minutes. So a lot faster and a lot cheaper. Customers just have to log into their SaaS platform, select a tasking for the data feed, and then they receive the imagery and analytics and insights. That's a pretty huge change to what used to be a very manual process where they had to call companies, see if there was a satellite available. That satellite might have to move. They might not know where it is. They might have to get updated. It was a 2 to 3 day wait. You've got to get the image. Analysts have to look at the image to see what it looks like because the resolution wasn't very good. Then they get reports. Instead, it's just a very fast and seamless process now. I like all of that. Okay, and here's just an example, right? To give you a real world example of what they can do. So this is supporting humanitarian efforts, buses waiting at the border of Ukraine and Poland. So they could see at 9 a.m., which is this picture right here, 129 buses. 11 a.m., 145 buses. The second one, 3 p.m., 163 buses, and then 6 p.m., 212 buses. So that's the type of analysis that they're able to do. Okay, this is the company's most recent quarter. Revenue was up 91% year over year, but it was only $14 million in revenue. They got a multi-million-dollar contract with an international government. They can't share a lot of their stuff because it's secret or private. They signed additional agreements with other government agencies. They expanded existing contracts. They've got some new commercial customers. They increased their global reseller network by 25%, enhanced software platform with new imagery, sensor, and analytical capabilities. And then they successfully launched 2 additional satellites, expanding the revisit and capacity. And so you can see the revenue growth has been pretty strong, 30%, then 70%, 81% year-over-year growth, 40, 78, 39, 49, 79, and then 91. Okay, so what are those 2 big red flags that I'm talking about? The first is the market cap. It is a $261 million market cap company. The fact of the matter is that when a company is below about $1 billion in market cap, but even $1 billion, they can be manipulated a little bit. There's not enough dollar volume in the stock to keep it from having big swings just on potentially, big buys from people that aren't even like huge investors. So, a few investors could drastically move this stock price. That's one thing I really don't like. I like to look for companies that are $1 billion plus in market cap. And I usually stay around under 50 billion is my preference. So $1 billion to 50 billion, I think that provides a lot of opportunity for upside. I do obviously own some stocks above $50 billion in market cap. So that's strike number 1. Strike number 2, and this one is the killer for me, at least for now. And so full disclosure, I will not be buying BlackSky, but I could see how it's potentially a great investment by the industry, the potential revenue growth, and what they've grown so far. This is their last 10K, so their annual report. The loss of one or more of our largest customers could adversely affect our results of operations. We are dependent on a small number of customers for a large portion of our revenue. In fiscal year 2021 and 2020, we had 3 and 5 customers that each accounted for more than 10% of our total revenue, and in aggregate accounted for 45% and 74% of total revenue. So in 2021, 3 customers account for 45% of their revenue. And so that could be seen as a good thing because some people could like that and they could say, okay, they're just getting started. They're going to grow their revenue and grow their customers and they'll be fine. As much as there's a lot of upside potentially in BlackSky, I have a lot of other high growth companies that I think still have plenty of potential for growth that aren't that reliant on that small amount of customers. And so pretty much for that reason alone, I will stay away from a stock like this. Market cap's too low and they have too much of their revenue from just a few customers. And if those contracts get canceled, if the customer goes bankrupt, if they go away, they delay image requests, they delay their business plans, that could just significantly adversely impact the business. And I just know myself, and I don't have to invest in companies like this at this stage to still do well as an investor. There's just too many unknowns. As much as I love risk, you have to know what type of investor you are and what type of companies you want to be invested in. There's certain things I'm just not willing to do, and I'm not willing to own companies that have that much concentration of their revenue.